Hello there, welcome to Venture Capital with me, Katie Pilbeam. I hope you had a wonderful Christmas, I certainly did, and now I'm looking forward to New Year celebrations. But what a year it's been for the Russian economy. We'll be looking back at the highs and the lows. Plus, despite a challenging year for the Russian stock market, in-house investor Tim Kirby, he's managed to make money by simply spinning a wheel, and today he cashes in. We'll find out how much. That's all on the way. So in 2014, there was Western sanctions against Russia and then counter-sanctions from Russia with the food ban, Ukraine refusing to pay their gas bill, rising inflation, the scrapped South Stream, but it wasn't all bad. And now there's the Turkey pipeline in its place. Kiev is, well, it's paying its bills now. There were the historic gas deals with China, the BRIC Development Bank, and the expanding customs union too. But the rocky ruble and the plummeting oil prices were the main indicators and dominated domestic headlines and indeed global headlines as well. Now, the global benchmark price for oil, it slumped this year to around $60 a barrel. There was a slight gain this week, but albeit very modest indeed. And thus, the ruble has lost 50% against the dollar this year. Again, it did strengthen slightly. It did reach 52 against the dollar this week, actually the highest since December the 2nd. Well, I'm now joined by Alexander Prozvyakov to discuss the biggest economic events of 2014 for Russia. One of the biggest dooms this year has been the ruble. I mean, who could have predicted this would have happened? Certainly not me. If you look back a year ago, even the beginning of the year, what a decline. What do you make of that? I mean, it has had a resurgence this week, but it's still tough times for the ruble.
Yeah, exactly. It's all linked to the fact that we had to pay off the foreign debts. We had to buy them on the open market because the central bank was not lending dollars to the companies and the banks. And this was the main mistake that caused the companies to go on the market, start buying the dollars. The dollar rate started to go up, and the people are very afraid because they remember what happened 10 years ago. They remember what happened several times when we had this default, when we had the crisis. Every time the dollar starts going up in value, people get so afraid they take all the money from the banks and just buy the dollars.
Yep.
And the people have over 18 trillion rubles just on savings accounts in Russia. It's a huge amount of money. Last week, they took out 700 billion rubles, and this caused several banks basically to collapse. We thought that the central bank saved Trust Bank last week. So basically, if the rate was going up further, I think more banks will be in trouble. So government had to step in, and this is what they basically did. They started to give the dollars to the companies and the banks. They started to intervene in the market. Last week they spent over $5 billion intervening just to keep the rate stable. And this is very important because we don't need this panic. We need people to be relaxed, to be confident that everything will be fine. And after that, the banks will be working, that the companies will be working, we'll pay off the debts, and we'll have nothing to worry about in the years to come.
Yeah, no queues at the banks. No one wants that. Another thing as well, you just alluded to it there, this $400 billion that Russia has. So you do agree that now is the time to start spending it? Because the whole point of having that buffer zone, that money, is for a rainy day. It is a rainy day, isn't it? So is it time to spend? Do you agree? I
don't think we have to spend them. I think we have to use them, and the government start doing the right thing. They started to lend this money to them, not to just spend it on interventions. If you spend interventions, you lose the money. If you lend it, you will get it back. You lend it on a collateralized basis. We have collateral, so it's a pretty safe bet. Like we saw that this week, the reserves are down $16 billion, and everybody thinks that we just spend them away. No, we gave it on repo instruments to the banks, so banks have enough liquidity to basically keep on going. They will be returned on a monthly and a weekly basis, so we're using them now. We finally started to use them, but we're not spending them, and this is good for the credit rating because we do need the reserves to keep up the good credit rating.
Now it's time to get your crystal ball out. You've already said some positives about next year, but what can we expect? Give it to me brief. The Russian economy, what's going to happen? Because we started off the year with growth. It's changed quite dramatically. What's going to happen in 2015 to conclude? Yeah,
this year we're still growing. It's I think 0.6% GDP growth this year. Next year, probably, if the oil price stays where it is, we're going to fall down maybe a couple of percent. I don't think that is a big problem for Russia still, because this is the time when we have to pay off the major debts, as I said. Once we get rid of them, there's only way up because we
clean slate.
Absolutely. It's going to be positive after that.
All right. I like your positivity. Alexander Prozvyakov, thank you for coming into the studio, and Happy New Year.
Thank you. Happy New Year to you too.
2014 wasn't all about the Russian economy, though at times it kind of felt like it was. But what was happening elsewhere? Well, we're now about 6 years on from the financial crisis, and the US has had a strong year for growth, and it did announce that it was ready to stop flooding the market with cheap money. The Eurozone said it wasn't ready to even start with this, and that process in Japan continues on that stimulating path. China overtook the US as the biggest economy in the world in terms of purchasing power anyway. The emerging markets, they had a tough year, and the British economy had a respectable, modest growth record. So lots to talk about, and I'm going to do so with Patrick Young right now from DV Advisors. Patrick, hello. So I want to get your take on what's happening in Europe firstly. So we've got stagnation, we've also got fears of deflation, we've got the situation in Greece, the political situation too, because if we remember back in 2010, we had a political instability then, and that didn't end well. Is history repeating itself? A lot going on, Patrick. Can you just give me a take on the Eurozone now?
It has to be said, if you were the doctor to the Eurozone at this point in time, you'd want to resign because it refuses to take its medicine. Ultimately, the euro is a currency farrago, a currency mirage, if you like, held together by duct tape and a little bit of blind hope. Prayer, indeed, for multicultural religions from Brussels, but ultimately it has no economic foundations. We can see the fissures growing across the whole continent. In Greece, indeed, there are political problems at the moment with this presidential vote, but let's not get too hung up on that, because that's really just one tiny part of the whole larger Greek picture. Ultimately, Greece cannot survive in the Eurozone, full stop. It's just a question of when the people finally realise their future lies outside it. They've had a 27% recession over the course of the last 5 years, a full-on Great Depression akin to America in the 1930s, and this year growth came back. It was an anemic 1%. Absolutely pathetic. At this stage, you would expect a much bigger bounce. Why? Because ultimately, the euro is a straitjacket stopping anybody in the Mediterranean from exporting their products, because the euro is essentially priced to export Mercedes-Benz.
I was going to move on to that as well, because it's been very much a year of quantitative easing. So Europe have not really ignited their full bond buying scheme yet. The US has begun turning off the tap. Japan is carrying on with their scheme of stimulation. What's your take on this whole stimulating regime that the world seems to be addicted to? What's next? 2015? Are we going to see a backlash?
I think there has to be a backlash. I mean, take Japan first of all. Well, Japan has just essentially gone into a kamikaze mode for growth. There's no other way to put it. I mean, they've already got 220% debt to GDP. That is entirely unsustainable. You know things are going badly wrong when they try to sell government bonds in advertising to the average Japanese salaryman by saying that it's going to give him added sex appeal. That's clearly the point at which you're finding it difficult to sell any further bonds. They've ignited this absolute folly of quantitative easing, which in 50 years' time the history books will report as having been the greatest suicide, the hubristic last throw of the dice of the fiat currency era, of all of the central bankers who'd ultimately lost touch with reality. What we're sitting looking at now is perhaps Europe will go quantitative easing. The Germans don't like the idea, and indeed the problem is the leveraged balance sheet Europe already has. 177% debt to GDP in the likes of Greece. Even somewhere like the UK, outside of the Eurozone, theoretically some sort of arbiter of good, sensible fiscal policies, but actually have seen their debt balloon. They're up to about 90%. The truth is, the world can't afford quantitative easing. What we need is nut and branch, root and branch reform. We need to go back to basics, and the basics are that the likes of the European economy is going to go nowhere while you can't employ people, while it's incredibly bureaucratic to have startups, and the European Union tethers and binds us in hundreds of new regulatory red tape measures every single day, killing the entrepreneurial spirit of the continent.
Right, back to basics. I like it, Patrick. Wise words as usual. Thank you so much for joining us. Always great fun to have you on the show.
Happy New Year.
And now it's time to not not go to the business desk, but join Tim Kirby, who's in the studio with us. What a treat.
Hi, Katie. Yeah, normally I just sort of hear you in my ear and I can't see you, but it's nice to actually see you and be in studio with you. So,
welcome. We should have done this before. I like it.
Well, we should have done it before, but we have a reason to do it today because today is the day that I cash out. Last week we had Gazprom. They gained a little bit, but overall, I came out way ahead, over 100% gains from the initial $10,000 a year ago.
That's pretty awesome.
Yeah.
Well done.
So let's talk a little bit about the history of the project, gentlemen.
Yep. Since March it started, didn't it?
Yeah, in March.
That's
At
when we kicked
first,
off.
you see that little spike at the beginning? That was because we got Aeroflot, the Russian airlines, right when a lot of problems in Kiev started to get very hot and active,
Bad
which
timing.
meant they canceled a lot of flights and their stocks went down. So that was a terrible start. But then we had, for 2 weeks in a row, the Russian grocery store chain Dixie hit huge. Maybe it was even 3 weeks in a row, but that's what caused that first initial spike going up. And then around August, I had a fantastic month, especially when the company Avtovaz, which makes a lot of Russian cars, got word of a cash for clunkers program the very week that it came up on the wheel. That shows the power of random chance.
Awesome. And you've kind of stabilized a little bit since, but all in all, not bad.
And actually,
August was a good month.
For me, that's interesting as someone who's not a financial expert, because when we're doing just a random wheel spin, investing everything, I expected total chaos and to just go bankrupt. But now, the portfolio has balanced out, which is really interesting. Up 1 week, down the next week. But
and it's all thanks to this.
All thanks to this.
And your finger.
Yes.
Is it a magic finger or a magic wheel? We don't know.
I think it's more the wheel. I think the wheel is doing it. And also the fact that this year a lot of things have influenced these companies, especially like, for example, although it's bad for Russians to take vacation with the weak ruble, it's been really good for manufacturing and for the farm production.
Yeah, agriculture and all of that.
Yeah, agriculture's been great fourth quarter this year. So.
Okay, and what are you going to spend it on?
Well, Katie, unfortunately, it's not my money. It's the company's money.
But you still get to choose, as long as it's something quite sensible.
Well, we're in Russia. Big, extravagant, wasteful corporate party. Let's do it, Katie.
Woo!
$10,000 party. Champagne.
Excellent.
Maybe pizza, maybe something more sophisticated. It doesn't matter. But what matters is the pleasant company, like you, Katie.
Oh,
so.
Well, listen, you've done really well, so I'm going to give you a present.
A present?
Yes,
all right.
because it is Christmas after all, and it's New Year celebrations and all of that. And also, because your food company did particularly well, I thought something edible.
Oh,
and
edible,
you like your food.
As you may have noticed, Katie, edible is good for me. So let's see.
Yeah.
Oh.
So you get.
It's interesting.
You can tuck it in whenever you want to. You can have it with cream. You can have it with custard. It's a British Christmas pud.
Wow, that looks fantastic.
Yeah.
I hate the bad rumors and bad reputation of British food. I like British food. Everything I've had is great. So thank you very much for sharing your culture with me, Katie.
Well, thank you for being on the show. You've been absolutely brilliant. And I'll see you at the party. We need to go get organising it.
All right, let's get started.
All right, and that is it for this year's show, the last show of 2014. Thank you so much indeed for joining me, and I want to wish you all the best for next year, for 2015. It's going to be a good one, isn't it?
You know what? I think so.
Yeah, I think so. All right, cheerio. Thanks for watching.
Take care.